Good afternoon, ladies and gentlemen, and welcome and thank you for joining us for the next installment in the ADMIRAL Markets Trading Spotlight webinar series. And today I'm here to talk about how to debrief your trading to improve your performance. It's a fascinating subject, a subject I could actually personally speak to you for the remainder of the week. It's many fascinating facets to it. But today what we'll be talking about is hopefully giving, some of you traders who I believe, some of you will be new traders, some of you will have had some experience, some of you might be intermediate and experienced traders, just some insight into, what we can do to improve our performance and how we can use debriefing as one of those particular tools. We're going to be leaning a lot upon my experience, okay, which we'll talk about a bit later on, and hopefully it will be help you sort of just be able to move forward in your own trading business from tomorrow in terms of new tools and ideas of how to operate. If you already do have some particular skills or tactics or concepts that you use, okay, to improve your own performance, then it'd be great to hear about them. You can put them up in the chat box. If you're watching this on YouTube later, then please, by all means, just give us a comment in the commentary box. If you find this useful, enjoyment, give us a like. If you've got thoughts about what you'd like to see us cover in future Trading Spotlight webinar series, please put them down, whether it be in the YouTube comments or here. We're happy. We always enjoy the interaction. So, what we're going to talk about today is, well, firstly, why is it important to debrief your trading? Okay, why bother with it? What's the big deal with it? Why does it actually have to be done? And then we'll talk about, well, how can you do it successfully? All right, if we're going to do it, well, we need to understand the best ways we possibly can do to do it. And also we'll talk about, how do you make the changes necessary? Now, that in itself is a webinar all of its own in terms of actually taking data and then using that to enable better choices, okay, better habits, better behaviors. But we will touch upon that, okay, today. So, as I said, there's a lot to cover here, and there's actually a fascinating topic, all right? And the longer you trade, the more you'll realize how important this becomes. And if you are, if you don't particularly enjoy this aspect of trading, then my first top tip of the day would be, well, learn to love it, okay? Learn to love it, because by doing so, you'll engage with it more and you'll actually get so much more out of it, and it will help you improve fantastically, swiftly in terms of your own sort of trading progress. For those of you who don't know me, my name is Paul. Okay, I've traded for many years. I've traded primarily for FX indices, commodities, but I've also coached and mentored many traders over the years, and look at actually how to help those traders improve their performance. So this subject today is very close to my heart, and it's primarily my own trading is kind of trend trader for longer term trades. Intraday trader, I'm more of a reversal and mean reversion trader. And as for ADMIRAL Markets, well, as you can see, they're a Forex and CFD broker that provide a wide range of financial instruments. They have a real sort of a global reach, and they are licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and giving you the opportunity to engage with markets using both MT4 and MT5. If you've got any questions about ADMIRAL Markets, please get in touch with your account representative, and they'll be very happy to help guide you. But let's kick into the main meat of today's presentation, ladies and gentlemen, right? How to debrief your trading to improve your performance. So, as I said, it's fascinating, okay? There's something I dedicate an awful lot of time and energy to. And there's one of the reasons is that I put it in for us to actually to talk about this today. So here today is actually my birthday, and I never trade on my birthday. I always take the day off, okay, because for many reasons, because I just want to sort of take it as a time to reflect upon my year, okay, and in many ways I will actually be looking at debriefing my own trading from this past year, and what a year it's been, ladies and gentlemen. All right, so there's been a little bit of everything, the good, the bad, and the ugly. So it's important to take this time to debrief to your trading to improve your performance on a big global scale, and also on the sort of tactical day-to-day, week-to-week. So it just seemed like a very good day for me to talk about this particular aspect of trading, of trade performance, which is something that is really very important to myself. So, you know, we've had a couple of comments here already, okay, saying that one of the guys saying, well, they use various things like journals, portfolio tracking, trade analytics to help them. And we've got friends here, and we've got friend Claudia from joining us from Colombia, okay, and Medellin. Fantastic, great to have you here. Hope you will enjoy it. Peter says, "Happy birthday, Ronald." Yeah, happy. That's very kind of you. It's very kind. You don't normally sort of celebrate them, and you get to sort of be a old age like mine. But anyway, hopefully, it's great for you to join me here today. All right, and it's great to use this as an opportunity to talk about how we can improve our trading, because really that's what we're after. All right, that's what you want, isn't it? You want to be able to improve your trading, okay? And you know, I can talk about this, as I say, till the cows come home. But you know, we're under a little bit of a time limit here today. But as the slide says, new traders often get caught up in the process of executing trades. However, true progress is made when a trader reviews his trading and uses that to develop his trading performance. As traders, we love to focus on the hard skills of trading, so the technology, the charts, the trading systems. However, when we combine them with the soft skills of performance management, then we start to see progress. And so in this session, we'll look at how to debrief your trading to improve your performance. So as it says there, new traders get caught up in the process of executing trades because they love it. People love it. They're new to trading. They want to be buying and they selling. They want to be engaged in the market. They want to thinking that that is the quickest and fastest way for them to achieve their particular goals. But actually what you realize after you've traded a while is that, you know, unless you're debriefing your performance, well, then you find yourself making the same mistakes again and again and again. It's either costing you in time or money or just emotional pain. And it is about when actually, you know, when you start to focus on those soft skills of managing your performance, managing yourself, that is when you start to turn the corner. Okay, I talk about it kind of like turning the super tanker. All right, if you've ever seen a big super tanker trying to turn, it doesn't happen fast. All right, it doesn't happen fast. These things take a little bit of time, but it's more important for you to be on the right path than to be crashing towards the rocks. Okay, hopefully you would agree with me on that. Frank says, "Happy birthday." That's very kind of you. You're all very kind of you. Thank you. So here's a question for you to ponder, traders, all right? It's something for you to think about. As traders, we all want to achieve our goals and see some success, okay? Let's take that as a given. Otherwise, why would you be trading? However, occasionally, we have to take time to reflect upon our endeavors and reset our vision and our goals. Many new traders fail to see the importance of such actions, whereas I can assure you that it works. So here's a question for the doubters. Is it possible that your trading results for that session could be determined before you even switch on your computer? Think about that. Just take a moment to think about that. Is it possible that your trading results for that upcoming trading session could be determined before you even switch on your computer? What do you think? Do you think they could be? Do you think there's absolute nonsense? Do you think it's absolute, it doesn't make any difference at all? Maybe you think that perhaps there are sort of factors that may play into actually, you know, sort of having an impact upon your trading results. But it's important to understand that, okay? And it is important, as I said there, to take time to reflect upon your endeavors and reset your own vision and goals. That becomes increasingly important. Ronald says it could be when you have a bad mood and so on. That's spot on, Ronald. That's absolutely that is very much, you know, that's very much can be very much a contributory factor. You know, if you think that you know you can have a late night, okay, or you can be out late, maybe you've been out partying if you've been celebrating your birthday or something like that, or maybe you've had been up all night arguing with your partner, or maybe you've just not had a good night's sleep, maybe you've been traveling. All of these things, do you think that, you know, you can actually have all of those elements, you know, come to you, and then for you to be able to set up and just trade like an absolute superstar next day? Just think about that, okay? Think about that, because, you know, I said I've traded for many years, and I've traded and coached, you know, all sorts of traders, from complete beginner retail traders to traders working for like tier one banks, okay, running like $200 million books, okay. So, you know, I've seen the spread of traders, and we're all humans, okay. We're all humans, all right. We like to think that the technology, okay, will kind of save us, but actually, you know, we are all emotionally the same human beings as those from like 100,000 years before us. Claudia says, thanks for giving us your point of view and congratulations on your birthday. That's very kind of you, Claudia. Thank you very much. So let's have a look at this. Here's, I know I've talked about this before, this is what I'm talking about as an amateur trader's focus goes, okay? As generally, this is where an amateur trader's focus goes. So as you can probably see there, the vast majority of the focus goes on the method, all right? The trading, where am I buying, where am I selling, okay? They get caught up in the execution. Then a great deal of their focus goes on the actual markets, all right? They're interested in markets. What's the pound against the dollar doing today? What are the American indices? You know, what's going on with gold, okay? And then finally, maybe the last 5 to 10% might be on the money management, the risk management of their business. And actually only a little bit is on managing themselves, understanding their trading psychology, all right? That is where generally we see like an amateur's trader's focus goes, all right? Now, here's a question for you, ladies and gentlemen. What do you think it's different? Okay. What do you think, how do you think those numbers would be different for where, let's say, a professional trader, someone who is a long-term, consistently successful trader, whether they are trading for themselves or a prop shop or a bank or a fund? Regarding and relative to the amateur trader's focus, where do you think the professional trader's focus might be? Okay. Do you think it would be the same? If it's not the same, where do you think most of their focus would go? Maybe you don't even understand. Maybe you've not really realized, all right, this is the first time you've actually had to think about it, you know, because you've just been so busy executing your trades and you've never really given it any particular thought. And Claudia says, no, it's the same. Well, there you go, Claudia. You might want to phone a friend on that, like the game show, to sort of have a look at that. But what you'll find is that the numbers are actually quite different, and in many cases starkly different. All right, and it's important for us to understand that. So what we're looking at here, okay, is the makeup of a professional trader's focus. It's almost like a flip, all right? So 60% of it is on managing myself, okay? It's on managing self, all right? Then the next 20% of it is on money management, all right? Risk management. Then maybe only sort of 10, 15% is on actually just understanding the market, just recognizing what environment that market is in. Is it trending? Okay. Is it range bound? You know, is it consolidating? Is it turning? And then actually only maybe 5 to 10% is on their trading method. Part of this is because normally professional traders have worked out their method, and so they have a very simple set, a method that might have, you know, a few different tactics which they use, okay, and they're simple and they're replicable and they can just trade them consistently, and so they don't actually spend that much time working on that because they've just got simple setups that work for them. Their focus is all about managing themselves, and the longer you will trade, the more you will realize this. And I appreciate, you know, we have always, you know, a wide range of experience in the room, okay, from people who are completely new to people who've been trading for 2 years, 10, 20, you know, and so hopefully, you know, those of you who've traded for a good while will recognize that actually, you know, where your focus goes in terms of understanding and managing yourself can have a huge impact on your trading, to the extent whereby, you know, your trading results might be, you know, created before you've even switched your computers on in the morning. If you're not really aware of yourself, okay, if you're not really aware of your personality, your character, okay, your strengths, your weaknesses, your flaws, then invariably they will all show up in your trading. I guarantee it. New traders say, oh no, Paul, no, it doesn't. I guarantee it will. All right. I guarantee, ladies and gentlemen, it will, time and time and time again. So the swifter you are aware of the mistakes you make, okay, the poor habits and behaviors you bring to your trading, the better that will actually impact upon your trading, because you're in a position to start to make choices, better choices about where your focus goes, where you work, okay, how you engage with markets, when you engage with markets, and what particular style of trading you should engage with. So, you know, what can we learn from this? What can we take away? What can new traders think about this? Is that simply focusing on your trading method is not enough, all right? I get it. We love trading methods, okay? I run social events for, well, I run social events for traders, you know, in the UK and Ireland, and traders get together and they love to talk about their trading method, and they love to hear and learn about other different trading methods. We love it. We enjoy it. Those hard skills. It's fantastic. We enjoy it, okay? But what you have to realize is that just focusing on method is not enough. Trading is a performance activity, all right? Trading is a performance activity. And so as traders, You need to start to develop a performance mindset to enable you to operate effectively. And that's also, a case of understanding, when you're in a good place to sit down and trade, but also equally to recognize when perhaps you're not in the best physical or mental space to actually engage with and trade with markets. That performance mindset is what provides you with the resilience to be able to handle whatever happens in the market. All right. And any of you who've ever traded live markets will know that, once a live trade is triggered, anything can happen. And that actually has to be one of your sort of kind of fundamental core beliefs, as sort of talked about by Mark Douglas in Trading in the Zone, is that, anything can happen. And you need to have a mindset that has the resilience to be able to cope with that. And this is the sort of the kind of major part of the what I call the 4 M's, okay? And the fourth M is all about managing myself. And the longer you trade, the more your focus will go on managing myself. So then it becomes, well, all right, that's all well and good, Paul. Great, thank you. But how do you do this? What can I do today that can actually help me start to manage myself better so that I am in a position to sort of improve my trading performance? Well, one of the very simple things you can start to do is start by keeping great records that provide you with the data to help you make better choices. And with better choices tends to come better performance. And that's what we want to talk about here. So here's a great quote from a well-regarded and well-known trader and coach, Dr. Alexander Elder. He wrote a book called Come Into My Trading Room. I can recommend it. It's a good book. Okay, it's a very good book. And it's a great quote from him. Okay, show me a trader with good records, and I'll show you a good trader. And I would stand by that comment. Okay, 100%. Okay, absolutely, totally and utterly back it. Because even from my own experience from working with hundreds, thousands of traders over the years, show me a trader with good records and I'll show you a good trader. And it is so simple, and yet it is actually bang on the money. Okay, it is absolutely 100% totally spot on. So with that in mind, we need to think about, well, what types of records should we be keeping? Now, we're very fortunate these days. Okay, when I started out trading, it was all kind of, done by hand, done by paper, then maybe onto spreadsheets. Well, nowadays there is actually a wide range of, software packages that you can actually utilize. Even some of the charting packages themselves will keep elements of your data. So it is it's much easier. There's no real excuse not to be keeping your particular records. But what you should be looking at is, if you're not aware of it, you should be keeping a spreadsheet of your trades, okay? You should be keeping a journal of, if not every trade, significant trades, and we'll touch on that in a moment. It's important to also keep on top of your equity curve, and another element that I like to tell people to focus on is also the grade card, okay? The grade card for your trades, which we'll have a little look at here and now. So, you can have like a trading spreadsheet, okay, an Excel. That is an enormously basic, simple one, okay? But the important thing is that it actually makes sure that you keep your data. Now, some people will say, well, Paul, I can just effectively, I can, download the data from my MetaTrader platform. And you can, you absolutely can. But, here's a little point, okay, is that the performance point is that it's actually not your broker's responsibility to keep your trade records for you. Yes, they do. And yes, there are tools there, but actually it is your responsibility, and it's something you should hold yourself accountable to. And it doesn't take very long to fill out a quick spreadsheet, okay, with the data from your particular trades. And in valuing it's actually quite a good habit, it's a good performance habit to get into, to making sure that you're just keeping a quick sort of the numbers on your particular data, because it's just great data, okay? And and a lot of people don't like this. I, on the other hand, I love this. I love digging into the data. I love gold mine, because I think of it as a gold mine, and that within here there are little nuggets that I can sort of mine away and find that will help me make better trading choices in the future. And with that, okay, with better choices tends to come, better outcomes. And that's what I'm looking to do, to help me improve my own particular trading performance. One of the things I also do, and one of the things I stress for traders to do, is to actually grade your trades. Okay, grade trades, and you can have a very simple grade card like this. Okay, so it allows you to track and rate the performance of all your trades as follows. So I track my trades not only for performance, but also for execution. Okay. Why is that? Well, bear with me. You can see there, you can scale it from 1 to 5 for the performance. Okay. So 1 is, if it scores 1 on the performance, it's because my stop loss was hit. Okay. If it scored number 5, it's because my particular target was hit. And there's a range of them in between. And that's, that's nice. It's good to know and it's good to keep. Okay. But for me, the really important one, okay, is execution scoring, okay? And that is what I look to focus on. And that's what I look to focus on in other traders. Namely that, scoring from 1 to 5, okay? So if you scored a 1, it's because it was an impulse trade. You didn't have any plan. You switched on your computers. The screen came up. You saw a move. Whoa, put the trade on, okay? That is completely an impulse trade and it scores 1 because those are not the kind of behaviors I want to see in my trading. I want to basically plan my trade my plan, and manage my risk. If I do those 3 things, then every trade I take is a success because those are 3 things that are within my control. So if I'm doing an impulse trade, I'm scoring 1 because that I have not planned my trade or traded my plan in that particular case. All the way up to scoring 5 on my execution. So, I followed the trade as dictated in my plan, and that's absolutely spot on. And actually, as I say, that is where I will put my focus. That's what I want to look at. That's where I want to do, because these are all elements that I can control. These are all elements that I can work upon, okay, that every trade. As I've said a few slides back, once a live trade is triggered, anything can happen. Anything can happen. It could be the most beautiful setup. It could be the most absolutely beautiful chart, beautiful trend, beautiful setup, absolutely glorious. You think this trade is going to go all the way to the stars. The trade is triggered. You enter the trade, and then Donald Trump sends out a tweet, and the market just completely changes, all right, and reverses. There's nothing you could have done about that, all right. There's nothing you're aware of that. You don't have access to Donald Trump's tweets. I'm not entirely convinced he has either on occasion, but there you go, never the mind. But what I mean is that anything can happen. Once a live trade is triggered, anything can happen. So you have to recognize that within that volatile, uncertain, and ambiguous workspace, you have to be able to look at, well, what were the bits I could control? And they were the bits you could control before the trade was triggered, okay? Did I plan my trade? Did I trade my plan? And did I manage my risk? Those are 3 elements you can do every single time, regardless of what happens once your trade is triggered. Hence why I grade my trades on both the performance side, but also on the execution. And what I also do is to keep in a trade journal, okay? Now, it depends on how many trades you're taking a day. If you're taking, a couple of trades a day, you have no excuse not to be able to fill in 1 for every single trade. Alternatively, I appreciate if you're taking 10, 20, 30 trades a day, okay, because you're a very higher frequency trader, filling 1 in for every trade isn't likely to work, but you do have to fill in the significant ones. But, what I'm looking to do is literally, what I do here is, I fill in this. I prefer to do this by hand. I actually sort of print this off. I print a chart off, okay, of the trade when I take the trade before the trade is triggered. And then I take a screenshot of the trade after it's complete. So I've got a before and after. And literally, I'm just writing down all of the rules, okay? And I have to, I force myself to sort of think about, what did I learn, okay? And put down like 3 points that I learned from my trading. It also gives you an indication of maybe your feelings in your trade. As that trade is going on, you can put down a little note, well, I start to feel a little anxious or start to feel a little euphoric, depending upon how that trade is particularly going. But when you're forcing yourself to put down what did you learn on each of those trades, what you will see, okay, is that you will start to see patterns will emerge. In the same way there are patterns in the markets, there are patterns in your trading, there's patterns in your personality behavior. The quicker you are able to identify it, the quicker you can form tactics to mitigate that or just stop that behavior, dead in the water, okay? And that will all help, as I say, help you just making better choices so that you can just, drive towards better outcomes off the back of good data that you have collected yourself. So, once we've been capturing all this data on a spreadsheet, okay, from our trade journal, maybe, you know, as I said, you've used software packages. There are some fantastic software packages out there that will actually collect your data and do some of the analysis for you yourself. You know, I'm a bit of an old duffer. I like to collect the data and do the work myself, because the more I do it, the kind of more I'm in touch and have a bit of a kinesthetic feel of actually what's going on. But I also appreciate there are some fantastic packages out there that will help you with that. But once you've got the data, well, then you need to do the debrief. Okay, then you need to do the debrief. So you know, I am, as I said, you know, I lean on my earlier experience. So for those of you know, my early life was in the Air Force, okay, and in the kind of battle management fast jet community. Let me tell you something about the Air Force. They love a debrief. The Air Force loves a debrief, okay? They absolutely love it, okay? And so, you know, you might do a 45-minute mission, but you might spend 2 hours debriefing it, because they know it works, because they want to extract every bit of value, okay, from that mission. They want to basically take every learning point. It forces you, okay, it forces you to address the challenges, address the mistakes you made, and also start to, you know, as I say, identify your strengths, identify your weaknesses, start to build tactics to mitigate your own particular weaknesses. And it's the same for traders, okay? It's the same for traders. And what I suggest to traders is that, you know, at the end of every day, you should debrief your trades, okay? You should do that. Then again, at the end of every week, you should go through and re-debrief all of your trades. And then at the end of every month, okay, you should pencil in a block in your calendar to basically a few hours to re-go through your trades from the last month. Now, some people will be looking and say, God, Paul, that seems like an awful lot of work. Well, I don't want to be doing that. Jesus, no. I just want to buy and sell. The thing is, every time you revisit that trade, you are cementing, okay? You are basically cementing the learnings from those trades, okay? It's almost, as I say, like the Air Force, you want to extract every bit of value that you can from that experience. You've paid for that trade, okay? You've paid for that trade, you know, time, money, you know, emotion, all right? And maybe other elements as well. It's your responsibility to extract every bit of value, every bit of learning from it, okay? And as I said, if it's something that you find challenging or something that you doesn't find exciting, my suggestion is that, well, find a way to learn to love it, because this will make a huge difference to your progress as a trader. And, you know, with that data that you have, okay, not only can you debrief the trades, but you can also start to work out some key KPIs, key performance indicators. You can start to understand your win-loss ratios. You can start to understand your risk reward, your expectancy ratios, and you will start to see developing trends in your own trading. And this is something that can be, you know, this can be either a threat or an opportunity, because, you know, you might see opportunities there that enable you to change the way you're doing business so that you can be a better trader in the future. Other people see the data and they don't like it, because the data is just confirming that actually they've not been trading very well, or they've been trading quite sloppily, right? A bit lazy, a bit complacent. And invariably they don't want to see that data, because it doesn't make them happy. All right, what they want to do is they want to see nice equity curves and everything, and if the data is not telling them that, they don't want to look at it. But let me tell you, if you're having a little trading slump, the quickest way to turn it around is to get on top of your data, to actually understand and debrief and find out what exactly have you been doing, what has actually been going right and what has actually been going wrong. What could you actually change from tomorrow or change from next week that would actually help you, as I said right at the start to turn the super tanker. Okay, start to change the trajectory of that trend. So, as I said, one of the things is that, you can start to look at and start to key is key performance indicators, okay? And, they're important for traders, right? And they're important to understand. So you can take in a lot of this particular data. So things like, the number of trades placed, okay? And also you could even break that down even to deeper elements in terms of number of trades placed. Is there a particular day that you trade more? Is there a particular hour that you actually place more particular trades? All of this is particular data that is, as I say, is a gold mine to you. You want to be able to understand, okay, the number or the percentage of your winners versus losers. And people get a little focused up on that because they like to have a nice high hit rate, okay, and a percentage of winning trades. People like that. It makes their ego feel good. but there is so much more to being a better trader than just understanding your hit rate, as we'll go through. It's important for you to understand, well, what's the size of my average winner and what is the size of my average loser, okay? Ideally, you want one to be bigger than the other, all right? Preferably, you want your average winner to be a good size, bigger than your average loser. But it might depend upon also your particular trading style, but you won't know it until you collect the data and start to debrief it. It's very important to even understand, what's your average time in a trade. Okay, this can be actually quite crucial. This can lead you to making some very good trading decisions about how long you wish to stay in a trade. So, for example, I worked with a very, very successful trader a few years ago. Okay, a very successful trader, and and we worked together and we collected the data and went through it together as a good trader and coach. And what we realized is that for him, in the particular style he traded, that if a trade wasn't profitable within 15 minutes, it normally didn't go profitable at all. So he suddenly was able to have a quick tactic in place that allowed him that after 15 minutes, the trade wasn't profitable. He would just cut the trade. He would just cut the trade because he didn't want to wait, burning up all that emotional energy, hoping that the trade would turn his way. And that came out of, good decisions made off the back of just simple keeping the data and keeping on top of it. And you also might want to look at kind of numbers of longs v shorts. That's kind of useful. I know for myself that, kind of 2/3 of my trades are shorts versus 1/3 of my long trades are longs. And that's important to know that because it makes you realize actually what you do that. Claudia says, I do that and it's a mistake. Well, in terms of what, Claudia? But what also it can do is all those KPIs is that can get you down towards understanding expectancy. Okay, as traders, we want to be moving towards having a positive expectancy as opposed to a negative expectancy. A positive expectancy, very simply, is that over, let's say, a certain number of trades that you can expect to generate a certain return. Okay, so it might be 100 trades, might be 500 trades, and you do that by understanding the difference between your percentage of winners times your average winners minus your percentage of losers times your average loser. Okay, if you're a completely new trader, don't worry too much about expectancy at the moment because actually you need to build up data first, right? Before you know what your expectancy is, you need to have some data. So what you need to focus on is just basically making sure you collect that data, keep that data, and you start to, as you say, you start to get that data, start to be able to sort of dig in and have a little look at some of these useful key performance indicators to help you understand, how to better sort of guide your focus with your trading. So, what you'll start to do is that actually after you've completed that, then, you're in a position to sort of write a report, okay, on your overall performance. So, I used to work for hedge funds, and at the end of each month, I would have to write a report to them on, what my trading was like. And so I continued that practice, okay, after I moved back to trading for myself, because what it is, it's like holding you accountable. It's like responsible, and it's good because you have the numbers. So this is from a good few years ago now, but it was like one of the reports I had to write for a hedge fund. Okay, so the numbers there. So you can see there was like a 70% at that period. There's a 70% win ratio. 38% of my trades were reversals. 62%, so 2/3 were trend following. The kind of interesting point was that 50% of my losing trades were on Fridays at that particular time. Okay, which I was able to understand because I had the data. I used to start trading on a Sunday night at 10 o'clock, and I would trade long days. Okay, so by Friday, I was just mentally frazzled. Okay, my brain was shot to pieces, so I would make poor trades on Friday. So actually, I stopped trading on Fridays when I worked for that particular hedge fund because by the end of the week, my brain was just frazzled. We're also there have the average performance score, which is 3.5 out of 5. Yeah, okay. But what is the key one is my average execution score was 4.95 out of 5. Okay, remember what I was saying earlier? That's the one I want to be really tight on. Okay, executing my plan flawlessly, time after time. That is the sign of good trading discipline, and that's what we want to look to aim for. And then once you've done it overall, well, then you can start to break it down and actually start to do a debrief by individual strategy. You might have 3 or 4. Okay, so that was one from a good few years ago, which was called the Magnet, which was like an intraday scalping strategy. You can see in that month it created 44 trades. Total net profits was like 266 pips, okay, at a 73% win ratio, but the risk to reward ratio was 1-to-1, okay. So the risk to reward ratio would normally not be, you know, ideal. I like preferably to have asymmetric, but it was fine because the win ratio was so high for that particular strategy, okay. So you start to break down, this gives you the kind of information to make good decisions, because you start to get an idea when you might have little slumps in the individual strategy. No strategy works perfectly all of the time, every, you know, day, week, month, quarter, year on year, okay. But the better you have on your data, the better you're in a position to understand when a particular strategy or whether you as a trader are having particular performance, you know, peaks or in a performance trough. So, you know, here's another great quote from Mr. Elders, that keeping good records is the single most important contribution to your success. If you maintain scrupulous records, review them and learn from them, your performance will improve. And once again, I back this comment 100%, okay? Every trader that, you know, I have seen who've done this, their performance will improve. It's not an overnight thing, okay? It's not a, you know, these are not magic beans that overnight will grow you a beanstalk to trading success, but it is something that you need to embody, you need to embrace. It needs to become part of your habits, okay? Your behaviors. These are your trading routines, okay? By basically keeping good records, being able to debrief them, constantly debrief them, by being able to hold yourself accountable and keep on top of the data, well, then that will improve your performance, all right? And you know, and I appreciate some people look at that and say, well, you know, it sounds very boring, Paul, but the question you have to ask yourself is, you know, do you want excitement or do you want to be successful as a trader? The choice is yours, okay? The choice is yours, traders. I'm just here to help you, you know, sort of follow best practice and do the right things time and time again to help you make yourself a better trader. So, in terms of just a few final points, you know, there's the old adage that, okay, it takes 10,000 hours or 7 years to become an expert, okay? So in trading, in anything really, whether you want to be a violin or you want to be a doctor, you want to be a, you know, a racing car driver, you want to fly jumbo jets, okay, or you want to be a good trader. You're looking at 10,000 hours or 7 years to become an expert. You can speed up that process using constant debriefing, all right? You can take that away. Speed up that process using constant debrief. Remember what I said a few earlier? The more you debrief those trades, okay, the quicker your learning points will sink in, okay, and become your natural way of operating. Every time you relive a trade, you're cementing the learning. Losers see record keeping as a waste of time. Professionals see it as an investment that develops and improves performance, and therefore your P&L also. And it tells you how you're actually doing, which can be different from how you think you're doing, okay? Sometimes we like to live in a little bubble of denial. Sometimes we don't like to sort of embrace the kind of the harsh realities of it, okay, of trading. We shy away from it because we know in our heart of heart, maybe we're not doing as well as we could. Have a look at the data, okay? Just be clear with the data and use it as a learning point. It's a point. If the data hasn't been good, it's a point at which you can start to effectively turn that super tanker. That's where I want you to be, starting to turn the super tanker in your own trading performance. So in conclusion, ladies and gentlemen, it's important to focus on the soft skills of trading as well as the hard ones, okay? It's not all about punching the buy and sell button, okay? Keeping records is the first part. Good data is key, okay? And remember, it's your responsibility to ensure that you are keeping good records. Good records are a sign of self-awareness and discipline, all right? You know, by doing this, it is just helping you embody the best practice, okay? The best habits, the best routines, all of which help you in your trading discipline. And as we all know, discipline is one of the keys to trading success. Debriefing is key to improvements in performance, all right? It is absolutely key. Making mistakes is fine. You're a human, but repeating them is criminal. And that's the thing to take away, okay? You're a human being. You're going to make poor trading decisions. You are going to make mistakes. You're going to press buy one day when you should have pressed sell. It happens, okay? It happens. That happens to all traders. But repeating those mistakes, that is the dangerous and damaging part. And it's people who don't debrief tend to repeat more of their mistakes. Whereas when you repeat them and you see these mistakes being repeated, it forces you, it drives you to actually to face up to it, to action it, and to get better at it. And that is all part of the process of you becoming the best trader you can be. So records and debriefing speed up our progress towards trading success. Absolutely spot on. They allow us to adjust our trade plans on the back of our data, not just simple gut feeling. Okay, people like to use simple gut feeling and they say, oh, follow your gut. But at an early stage of your trading career, your gut feeling isn't smart enough to really fully understand. Okay, your intuition isn't fully developed. It can take 5 to 10 years to develop trading intuition. In the meantime, you have to just follow simple mechanical processes like this until you've built up the wealth of experience and data to be able to make good trading choices. As Alexander Elder says, show me good records and I'll show you a good trade. And he's absolutely spot on. Taking time to record and debrief your trading will help you improve your trading performance. And that's, if you read that and don't want to do it, well, then, you maybe need to have a bigger question as to why you actually want to trade. Because as good traders, you should want to be constantly looking at finding what's my edge. Okay, how can I just improve my trading performance? Taking the time to record and then debrief your trading will help you improve your trading performance, ladies and gentlemen. So for those of you who want additional support, and we appreciate that, trading's a lonesome endeavor, you're very welcome to join us in the Trading Spotlight community, okay? So you can get support after these webinars. You can join us there on tradersyard.com/group/312. I'll be there this afternoon, okay, answering your questions, should you have any, and you'll find my colleagues, Marcus and Jens, they post some great stuff day in, day out, okay? So come along and join us in the Trading Spotlight community. And don't forget to join us next time, ladies and gentlemen. So on Wednesday, you can join my colleague Marcus to learn about the most common trading mistakes, including key facts about trading, why around 80% of all traders fail, the most common trading mistakes. So that webinar will be on 2 o'clock London time on Wednesday, 30th of September. Check your inbox for the webinar link or head over to the Admiral Markets website to register for those webinars. And you'll find, there's plenty of analysis, education, and wondrous research resources on the admiralmarkets.com website. And if you want to contact us, well, you can do email global@admiralmarkets.com. Watch this on youtube.com/admiralmarkets and on the facebook.com/admiralmarketsglobal. So, I hope you found that useful, ladies and gentlemen. Okay, I hope that's just given you a little bit of insight into how you can actually sort of use debriefing to help improve your trading performance and what you need to actually have a good debrief name to keep good records and on your data. As always, I wish you the very, very best of success in your own trading endeavors. I hope you'll watch this. If you've liked it, give us a like on YouTube. If you've got questions, okay, join us in the Traders Yard, or just put them there in the chat box or on the comments box in YouTube. We always make sure to answer them. And as I said, please, by all means, join my colleagues' webinars, and I will look forward to seeing you this time next week. And until then, ladies and gentlemen, trade well. Thank you very much.